Multi-asset strategies have delivered over time interesting outcomes for investors, with equity-like return and much lower risk, thanks to the benefit of diversification. But we have to admit, however, that the situation is becoming increasingly complex, including for multi-asset solutions. We have political risk, we have the uncertainty related to the end of ultra-loose monetary policies, and on top of that, we have to admit that the entry point in traditional assets is not very good, as for instance you can see from bond yields that are very low. We aim to offer investors a way to navigate through that challenging environment through a smoother journey. What does it mean? It means more steady returns across the different economic regime, and it also means achieving better results than standard multi-asset solution in the bad time. We mainly rely on three main pillars. The first one will be an enhanced diversification. The second one is that we rely on a systematic observation of the macro dynamics. And the third pillar is that we actively manage the risk. What do we mean by that? By enhanced diversification, this means for us, for instance, incorporating in a systematic way what we call alternative risk premia that are new sources of return, that are less exposed to the market directionality, such as solutions that like the trend following or the carry, that will offer investors other way to generate return in a different way. What do we mean by the systematic assessment of the macro dynamics is that we have designed some indicators called the nowcasters that allows us to try to assess for the various macro risks that we look at where we're standing now. So for instance, what will be the probability of recession now? What is the probability of an inflation shock? For us, risk is not a statistical measure. Risk is a loss of capital. And if you think about that dimension of the risk, you understand there are various sources of them. So we look at a broad-based measure of risk. And on top of that, we believe that risk shall not be managed ex post, but it shall be managed on an ex ante basis. So you shall position yourself and your portfolio in order to be prepared to different macro risk or different specific events like we had last year with political risk. We think two types of use by investors. Some of them are deciding to use that at the core of their portfolio, and it will be the main pillar. They will start their own portfolio. The reason being that this is a strategy that is aiming to deliver return in different market environments. Some other investors are more using that more as a satellite. It will be as part of their diversification bucket in a way, or they aim to go into the strategy for the diversification. In both cases, one of the most important aspects of the strategy for them is that those returns are offered in a liquid way and through a cost-efficient process as well.